Hi everybody, Lance from ThetaTraders.com here. In this video, I'm going to be going over transitioning from the micros like MES into the E-minis like ES, when it's appropriate to do so, how I'm doing my own trading strategy to converting and switching some positions into MES to ES, and then how to also update your trading plan. So let's get right to it. So right now, my account in my futures is in a pretty interesting situation, which I think a lot of members will eventually get to as well. Um, Total net liquidating value is about $40,000. And I'm at the point now where I could do some strategies with, say, MES. I could do some strategies with ES. I think the account size can handle a few ES contracts. And how do you actually understand when to go from those MES to ES contracts? Some of the pros and cons to both. For the pros in ES, the commissions will be less than if you did a lot of MES contracts. The bid-ask spread is usually a little bit better, where you have a little bit more volume, more open interest, so you could get fill slightly better in the ES and MES. However, with MES compared to ES, you're able to enter a bit more frequently, meaning you could stagger when your entries are. You get a little bit smoother flow to it compared to ES. Also, you can control the amount of your buying power use much more easily, and you can control where your stop outs are for, say, you're stopping out at no more than 3% of your net liquidating account. It's a lot easier to control that with MES over ES. So I'm going to go over my updated parts in the trading plan on trying to incorporate some ES and GC strangles instead of iron condors as well. And that's it. And so here's a blog post. I'll leave the whole post in the link in the description down below this video. Is my updated trading plan with a larger account. So in the beginning of May, I did have initial trade mechanics, management, and position size for each type of strategy that we're doing. I was aggressively adding funds into the account over the summer, and now we're currently at $40,000. So I've updated the trading plan with the following differences. The management, how I'm actually entering and exiting, is almost identical, but the main key is how am I adding ES into these. So if you want to see the full plan, I have a file at thetatraders.com. I can also help you guys out with your own trading plan and how to develop it. So low delta MES puts, that's part of our consistent passive profits strategy. Still going to enter 3 contracts a week. Target goal is at least 300 a month there. It used to be 1% of my net liquidating value, but I'm going to keep it at the same position size. So 300 a month's a little bit lower than 1% per month in a net liquidating, but I think it's still okay. I don't want to over allocate necessarily in this one strategy, but we'll be able to add to ES and other strategies. For the strangles, now I will start entering one ES strangle. I'm going to go a little bit lower delta than normal, about 0.03 delta on put and call side. Closest to the 90 days out. Take profits still at 50%, stop out still at 3x the initial premium. So I'm doing it the same way with the MES. With this one ES contract, the only difference is it'll be a lower delta. The reason why we're doing this is if I take a 3x stop, I need to make sure it's no more than 3% of my net liquidating account. That's part of my trading plan. I don't want any one particular trade to lose more than 3% of it. So if you go with the 0.03 delta, the 3x stop ends up being pretty close to around 2.6, 2.7%, depending on implied volatility, which is fine. For my other MES ones, I typically go around 0.06 to 0.11 delta. And those for MES, if I hit a 3x stop, I'm still way below the 3% of net liquidating. So here's trade entry, taking at least 20 premium for the MES strategy. For ES, I'm just going to take the 0.03 delta, whatever it pays. I'm not too concerned about the total premium there. Only going to have one ES strangle at a time. When I close it, I'm going to re-enter a new one pretty much right away there. Normally, I'm going to be adding these MES every other Friday, but the ES, I'll just pretty much be doing a floating. Once everyone trades out, just enter a new one, center out your strikes again, and keep going there. I do have a different management style for the MES, which I'm going to continue doing, but for the ES, it's going to be pretty straight take your 50% profit, stop out at 3x premium. I did show some back testing on these different strategies if you want to look in the blog post. 112 will be pretty much identical, but my goal is to be adding more 112 contracts. Whatever my net liquidating is 1K more. So if I add $1,000 more directly from my checking account into the brokerage, or if the net liquidating grows 1,000 just off these realized trades and profits. Still going to be on MES. My account's not quite ready for ES on these. If you want to do a 112 on ES, you're going to need quite a bit of funds for those two naked puts. Future goals, try to get to that ES 112s. So essentially I'm going to add in a new contract on these when possible. Show the back testing as well. Back test really well on the 112. So slight changes in how I'm allocating my portfolio just because I have more funds. I'm not really doing much different in terms of the strategies, but I wanted to incorporate a little bit of ES into this. Strat one is monthly low deltas. Going to still do about $3,000 my buying power a week. When the first puts expires, it just rotates to do new ones. So about 12,000 total buying power plus cash in the side for the monthly low deltas. Strat 2 is for the covered strangle strategy. I'm going to probably do more of the monthlies and around 30 days out. The VIX is very low right now at around 13. So it's hard to get a lot of premium selling weekly covered strangles. Still fine doing around the 30-day covered strangle, and that's what I currently have on. But if the VIX increases, I might add that weekly one as well. For the strangles, going to be adding more because you're going to need about 7,000 total buying power plus cash on the side. For the ES, so about 11,000 total there. And this is a pretty big change compared to before because I was just doing 4 MES strangles here. I'm going to be adding on a new ES strangle. For the 112, I'm going to still be doing 112 every other week. I can make up to 2 per month. 4 months ends up being close to $10,000. As the net liquidating increases, I plan on adding in more contracts when I'm entering the position. So if I have the extra $1,000 or so dollars you need for the strategy, instead of doing a 112, I'm going to do a 224. So it's going to double the contracts. So I'll use 2,000 instead of 1,000 that week. Strategy 5 is for GC and CL. I did write it more in the updated trading plan, but I want to be doing GC strangles instead of iron condors is the main issue. By doing fairly wide iron condors on GC, it does help with the net liquidating. But another benefit to having the $40,000 account over about 25,000 in the past is now I could do one GC strangle at pretty much 0.05 to 0.07 delta. And then if I do get stopped out on it with the 3x stop, it's not going to be over 3% of my net lick. So it should be fine to add in strangles. I prefer to do a strangle over the iron condor there. And total amount of funds used, it's about $39,000. As ideal conditions come in, I'm going to be adding about 4,000 or so in the other commodities. So again, if you wanted to help developing your own trading plan, you go to thetatraders.com. I do help members help write out their own plan for their own risk return tolerance. I'm a fairly conservative trader in these low deltas, but if you're a little bit more risky and willing to take a little additional risk to get more returns, we can help develop a trading plan for you there. So again, thanks for watching this video. Like, subscribe, share, all that good stuff. Helps out the channel. Appreciate all the support, and happy Labor Day, and I'll see you guys on the next one.